Good morning. All right. So nice number, nice move. So on the screen in front of us, we have the SPOOs on the left and the Nasdaq on the right. Gives you an idea. That's a pretty sweet candle, and and those are areas that were pretty much drawn before. Actually, the I take it back. The Nasdaq, that was really down in here. I just adjusted that, but clearly the 5,300 level at ES, that's just like a glaring number. It looked like Smooth caught a nice short there for a few points. That worked out pretty well. I didn't do anything. I was tempted to do it, but I don't know. I think it's just my discipline of just not trading, the data like this anymore. It was just a completely different gig when we were on the trading floors. You'd have the top step brokers where their orders are coming in from Goldman Sachs and Solomon Brothers and U.S. Trust Bank. I mean, Merrill, everywhere. And they'd be asking, hey, what's here in the 2-year? What's here? In this particular contract, you gave them a market, but I was giving them a market based on the order filler that was behind me that was four bid, $1 billion. And I'm looking at the other guy and I'm like, I'll pay 4. So the idea is you pay 4, and if the market turns south, I quickly turn around, and sell the 500 I just bought to the guy sitting the top step broker behind. So you're leaning on that. With these days with data during the electronic time frames, you just have to sit and wait for it to get to extended ranges, for any sort of a shot where you can define your risk a lot easier. The risk on the floor was like how many people are around you, how many order fillers that have stacks of orders that you're leaning on. That's where if he's 4 bid 10,000, I know I can buy 1,000 no problem and like sell it back to him and be net even. So just my way of looking at the data and why I don't particularly like to trade the data. But we got stretched there and Smooth took a nice level, and that was good. Get an idea of what's going on with bonds. There's a 20-year. That was a nice move as well. Outside of that, that's just observation. Generally speaking, if we find a way to kind of get above 53 even in ES and hold that level, there's possibility for a continuation up to 53, 29, 30 area was the next level that I had. It's equally possible that we will kind of come back in and trade back to the 52.76 and to see if that holds. So I kind of suspect that we're probably going to trade in this range today and consolidate here for any possible move higher, or if there's another.
What was the top and the bottom of that range you're pointing out there?
That is 53.02 right in here. 53.02, and then right in here is 52.72.74. That was the high from yesterday. So I'm just kind of guessing that we will probably trade and fill in this area, consolidate here before a continued leg. I think it's a stronger chance of that happening versus us getting above the 53 even and trading higher here. But anything's possible, right? So if we end up having, another Fed speaker come out and talk, and that would kind of suggest the market's pretty strong and everybody's sitting good, we could continue higher. Another data point comes out, we could continue higher. I mean, nobody knows the answer. I'm just kind of going trading level to level. So that's really all I have. I'll kind of yield to Dan and Lee.
So I will take over the screen, but I actually had to zoom way out a little bit here. Let me get my screen up. All right, so you can see my little emojis from way back when. They just stay on my chart apparently. I haven't zoomed out this far in a little bit, so apologies. But so zooming out here to the 4-hour gives you a little bit clearer picture than daily. So, oops, let me fix that. Sorry. So 4 hour, all right. We have sort of a double top area that could happen. And so there's going to be two trades really to simplify it that I'm going to be watching for today. And that's to come back up to this. If we bust out of 52,303, get over that, I think we probably beeline for this all-time high, which is, and let me zoom back in. Right here, right? Is that right? 50, yeah, 53.28, 53.29 that David was mentioning. So I'm going to be watching for either trying to get long, sort of 74, 76 area from yesterday's high, or I'm going to be looking to short a test of that all-time high. And those are sort of the two trades that I'm sort of watching and stalking today that I think could be 10, 15 point ES trades.
It'll be 53, 33, 50 is the.
Yeah, 53, 33, 50. So, I mean, those are the two trades that I'm really watching for. Yeah, that's really it in terms of indexes. Nice move. Bonds are sort of breaking out like they should on a little bit of a softer print. A lot of times when you have moves like this and they complete, and then we see us consolidate in place for the next 7 hours. It's possible. That's certainly something that's possible. I would have loved to see a break on that initial candle of this 5,300, a move that is 25 points or whatever it is from pre-release to data release is not all that big. So I'm not all that convinced we're going to be traveling a ton higher. I'm probably going to try a short at 5303, 5302.50, see if we come back and test that and fail again. But I was looking through too, and let me go down to 1 hour. I have a couple of levels here, and actually I changed the color on the levels I put in this morning, or yesterday. I started with the orange. So the light blue here is some old levels, and they are 5295, 5375, and 5303.75. Those are levels from, I don't know, a month ago. Whenever we were last here, I had marked those levels. So these areas are very, very important today, and we're really going to see off the bell in 21 minutes if we have the appetite right away to bust through that to the upside. I don't know. I think a lot of the unwind happens right away. We could bust through that, but I don't think I'm going to buy a breakout of that, to be honest with you. I'm going to try and short it once. I'll probably stop out if we do break through it, but that's why we zoom out. You see these old levels and old areas of importance, and they stay important. The index that is a little more interesting with bonds ripping, and you've seen me play this sort of correlation the last couple of weeks, especially IWM and RTY. I gotta look, and I will post my RTY levels. Let me see here. I can actually pull some of this up. Get rid of this for you. Let's go to 4 hour. So we've got sort of a pretty big area here, 5138. Break above that can get us up to 50 or 2138 and then 2164 area. So IWM is the absolute king of screwing you. And I would not be surprised to see a decent reversal at some point today in our RTY IWM. Maybe it comes back to this 2138 area and we try and short that, but we watch bonds for this one because bonds will lead this move. So that's a trade I'm going to watch today if indexes get a little stuck. It is that IWM and RTY, they tend to not be as stuck. So I'll be watching that one for sure. And I'll go to UB because David quickly touched on that one before. UB is sort of having a nice little move here. UB really, if you trade UB, pay attention to round numbers and how it behaves off round numbers. 125, 124, 123. It really likes those round numbers and it tends to magnet to them and it tends to reverse off of them. So we're getting into a little bit of congestion in here, this area from, what was that, beginning of April. So we're looking at all this congestion here. So this is going to be big resistance area. And if you go back even further, you can extend that this way. Top end of this is 126. So 126-ish is probably this area. Yeah, 126.04. So we're pretty extended on UB. So if we see UB get to this area and reject, that might be the key for taking an RTY short or IWM puts. So that's what I'm going to watch today. I'll turn it over to you.
All right. All right, here we are again. Just pulling up this pattern that I've been sharing for the last couple of weeks. We are complete. 52.90.50 was the completion level. So what does that mean? Well, this is a bearish pattern. But as I mentioned, this could play out into the secondary pattern and take us all the way up to 55.60. Too early to even look at that yet, but we have come over the 90.50.
What did you say the completion was? You said it was 52.90?
52.90.50.
Wow.
Yeah.
And how when you see these things on daily, what sort of your experience with slippage around those areas on daily charts?
Yeah, so that's what I was going to say, that we could even come up a little higher and then reject, and this could still be within that pattern. When you have wicks on daily, I do use them for the measurements, but definitely slippage is a thing, especially on daily charts. But just know that we're in that area where this could be sort of the completion of this, and then now we set up a bearish leg, at which point I would take these fibs off of here, and then I would just measure from this low point to the high point, and then look for my retrace levels, where we could, the first target would be a 38, which was right around 5,200, believe it or not, conveniently, and then obviously 50% and a 61.8. Textbook says that they should come back to the C point, which would be 50.35. But I wouldn't necessarily be doing that yet until we at least have a break of this daily candle, and start to look like we're actually going to retrace and think. We can usually see that a little sentiment shift, but it looks for now like they want to keep pushing this higher. But
and if you do see that sort of, are you going to be taking some sort of index puts off of the bearish pattern? Is that sort of your thinking?
Definitely not yet, but if I see things starting to break down, you don't have to be first. We always talk about getting the meat of the trade. If I took something now, it would be completely speculative because we're not seeing anything to show us that this is ready to short. And I also am aware that this could switch into a crab, which could keep grinding up to the 55.60. So I'm cognizant of that. And it's also, wondering, is ES the dog, or is SPY the dog? Because SPY already completed, 3 days ago, and now it's breaking out into all-time highs. So this is already sort of negated the bearish bat pattern, and it is kind of into excuse me, this bearish crab territory with a 543.87 target. So we'll kind of watch that, see how that plays out, and on the shorter time frame on the indexes. Let me zoom in a little bit here. So you can see that on this pullback from the big push this morning, we kind of found support at 52.88.25. That is a daily pivot area, so I'm watching these levels here, 52.90 to 52.88, to be supportive. If we lose that, then good chance we fill this gap, which would correlate with probably the SPX. That's going to have an opening gap here.
And that opens up the gap fill trade that we like a lot, where if we did come down and fill that gap, sort of taking the long off of the gap fill.
Yeah, which would probably be, SPX would be down to 46, 47. So probably correlates to what, 70, right around there. 69.
Yeah, 74, 76 are sort of the two areas that I don't know what the gap fill is. That David would be able to look and see what the gap fill number would be on SPX, but 74, 76 to me is just a massive downside support now.
Right. So yeah, initially I'll be looking at this 88 area as being a really key support. And then obviously if we get over this 5203, then it opens up these upside levels, and David mentioned some, but I have 5309 and 5311 as sort of the next area up. So just play those ranges. A gap fill would be nice. That would be sort of the ideal spot. But let's see what happens. And just quickly, Tesla's going to open up here around 180. We played this yesterday off of this inverse pattern. I said if it got over like 174, 175, which it did, it came up to 179.54. We've broken out over that level pre-market. So now, as I mentioned yesterday, 183, 184 becomes the upside target.
The ES, as it relates to the SPX gap fill, would be 52.71. SPX gap 52.47. It was that the spread was hovering 24. So basically add them. So technically the ES gap is the 52.71. So if you're eyeing, so that tells us if we're eyeing 74, 76 for a long, be aware that if SPX, they want to fill the gap, you could have 4 to 5 points of slippage underneath there. So you have to kind of watch your size. That's what that tells me.
Okay. So that's Tesla. NVIDIA is another one I mentioned yesterday that I had this 905, 911, 920 target, which we're over all three now, and now we kind of open up into this range up to 938. So I kind of mentioned that I've been sort of watching this, and it looked very much like a breakout. We broke out of this sort of flag pattern and came back and tested it a bunch of times, and now seems like we're into open sky here a little bit. The only other thing
I did just, and I posted in the chat, I don't know if people watch, I did just take a UV short at 124.30.
Okay. The only other thing I just happened to notice off of the report, a decent gap up on Lennar, so home builders are reacting well to this CPI report. Probably if you extrapolate why, well, if inflation's coming down, which it isn't really, it was kind of flat, but rate cuts are good for real estate, so directly. very directly. So if you have any home builders that you like to play or watch,
Restoration Hardware, baby.
yeah, RH is another one. Let's pull that up. Gapping up, $9. So yeah, any
It was yesterday's high was like 303, 304 area, so it needs to get over that. But I believe they have earnings. They have earnings on the 23rd. So I was looking actually at taking some May 24th calls, like 320s, 330s, depending on how they'll look.
Restoration's earnings aren't until June.
Oh, I'm showing the 2523.
June 6th.
Huh.
Yeah.
Okay. Well, Fidelity shows it as 523. So I will figure that out because that's actually important to the thought here.
Yeah, for sure. I was looking at AMD. That's interesting too. Has a little bit of a setup there to 176 area. So I'm going to keep an eye on that. If it can break out over this 160, then there's a nice play in that. Oh, it says Butters just posted that it says May 23rd.
Yeah, that's what Fidelity says, and that's what it says online, but it says it's unconfirmed, so maybe they haven't announced it yet.
Maybe, yeah. TradingView has it here for Thursday.
And the reason why it matters is I was thinking next week is that the premiums on it actually would hold pretty good. So that was what I was thinking, was that I would experience less decay because of not having to go out more time, when really my thesis is a couple of days for a push. But yeah.
All right. Well,
last one. I have one that can you look at for me?
Sure.
Palo Alto Networks at 305 here.
That's interesting. You got this 308.47 level, or 308.50 to get over. I don't see necessarily maybe this is kind of an inverse looking setup here.
Because they're another name that has earnings next week, from what I'm showing at least.
Yeah, it's sort of an inverse pattern, not the cleanest, but that would kind of be my trend line support to hold. You could also argue that this is a sort of a bear flag. So it's not necessarily clear, but it's a good stock. I like the company. So on a bigger picture, actually, you could also look at it as a sort of a head and shoulders, but yeah, so it's not entirely clear what we're looking at there, but if it can keep going up, and there's a gap up here, so if it can push into this 320 area, then you've got a gap up to 360.
Yeah, they have earnings I'm showing on the 20th, which is, what day is that? That's Monday.
Yep, Monday the 20th. All right, I think we're good. We got 6 minutes. Coffee, toilet, and
see you guys.
Bye.
Have a good day.